Adobe stock is cheap right now, and I can't keep quiet about it any longer. Wall Street is convinced Adobe is finished, that Figma will eat its lunch and AI will make Photoshop irrelevant. You've probably even seen the headline saying Adobe's best days are behind it. But here's the truth. Those fears are way overblown. Adobe is still the creative software king. It's already weaving AI into every product, and its valuation is one of the lowest it's been in years. This isn't the story of a dying giant. No, it could actually be a sleeping giant about to wake up. If the market has overreacted, this could turn out to be a millionaire maker stock. Stick with me, because we're about to see how Adobe could actually make you a millionaire. Every headline screams that MidJourney or Canva will replace Adobe. Adobe isn't standing still though. Firefly, its generative AI, is already baked into Photoshop and Illustrator. That doesn't make Adobe vulnerable. It makes it stickier. Pros stick with tools they already know. Adding AI features inside those tools just cements that loyalty. Wall Street expected AI to be a massive revenue booster, but they misread the play. Instead of driving short-term revenue spikes, AI is making Adobe harder to compete with. The company has years of Creative Cloud data to train its models, data that no one else has. Adobe has the money and resources to build AI no competitor can touch. Adobe isn't chasing a trend, it's defining it. If AI isn't the threat, the real question is, can anyone take on Adobe's full ecosystem? Figma has been stealing all the headlines lately. Sleek, collaborative, cloud-based, perfect for teams, and Wall Street loves to hype it as the Adobe killer. But here's the reality. Figma is just one shiny piece of the puzzle. Adobe's ecosystem of Photoshop, Illustrator, After Effects, Lightroom, Creative Cloud libraries is massive, integrated, and insanely sticky. Teams just don't pick up a single app. They pick up an entire workflow. Sure, Figma's collaborative features are slick, but Adobe can and will add those features into its own products. And when it does, the network effect will be even stronger than Figma. Switching to Figma may sound cool, but it doesn't replace what Adobe already provides. And now, with Firefly and AI tools already baked into it, Adobe is closing the gaps competitors have been trying to exploit for years. The real question isn't whether competitors can bring a singular good product. It's whether it can realistically take down a company with decades of products, millions of users, and capital no competitor can touch. Spoiler alert, not anytime soon. And let's not forget pricing. Most of the hate Adobe gets comes from its subscription costs. Figma, same story. In fact, their latest earnings even announced aggressive price hikes. Being cheaper doesn't make them a killer. It just makes them another option. If AI isn't killing Adobe and Figma can't realistically topple it, the next question is simple. Does the stock reflect this power? Are investors pricing in Adobe's dominance, or are they missing the real story? Let's dig into the financial numbers and see why this cheap stock could be a hidden gem. First, let's look at the top line growth. Adobe's revenues have been a straight line up for 20 years. No joke. When you zoom in on year-over-year growth, it's slowing a bit, yes. Wall Street worries about that, but the story isn't about sudden collapses. This is steady, long-term growth that builds a fortress. Next, profitability. Net income has been more erratic than revenues, but the trend is unmistakably upward. The last couple of years weren't jaw-dropping, which irked Wall Street, but the most recent quarter, a 35% year-over-year net income jump, that's proof that Adobe still knows how to print money. Next, let's look at the gross profit margin. These margins are almost criminally high. We're talking about 90% gross profit margins. That's insane. It's why Adobe can't invest in AI, integrate new tools, and still dominate the market. There's a ton of room to maneuver. Now we look at CapEx. Now, you might notice that CapEx, the money spent on building new infrastructure and tools, was high for a while, then dropped. That's natural. AI will still require investment, of course, but Adobe has the resources to fund it without breaking a sweat. They can spend big strategically, and that's exactly what they're doing. We want to keep an eye on this section though, as while it can eat into our profits, we don't want it to get too low either. Adobe should be investing in building its fortress walls higher. Finally, cash to us shareholders. Free cash flow took a dip during the CapEx spree, but now Adobe is off to the races again. Even if you smooth it out with a 5-year compounded annual growth rate, we're seeing 16% growth, showing that despite short-term fluctuations, Adobe's cash machine keeps humming. Adobe isn't just about making revenue, it's about making money it can reinvest or return to shareholders. That's a snapshot of where Adobe stands today. Steady revenues, strong cash flow, and margins that most companies can only dream of. But the real question isn't just where Adobe has been, it's where it's going. Let's dive into my own forecast now and see what Adobe might look like in 5 years. The upside might surprise you. Based on my model, I expect Adobe's earnings per share to grow about 18% per year over the next 5 years. Think of EPS as the amount of profit allocated to each share of stock. If that's growing, the company is becoming more valuable to us. Compounded, that's already a powerful tailwind. But I also think the market is undervaluing Adobe right now. Currently, Adobe trades at a forward price to earnings ratio of 15.7. That's just a fancy way of saying investors today are paying $15.7 for every $1 of Adobe's expected earnings. Historically, Adobe has traded closer to a forward price to earnings ratio of 29. If Wall Street re-rates Adobe to a more reasonable multiple, let's say 19 times earnings, you get two boosts: growth in earnings and an expansion in the valuation. When you put those two together, I project about 177% total upside over the next 5 years. To make it simple, $1,000 in the S&P 500 might grow to around $1,760 in that time, assuming 12% annual growth. But $1,000 in Adobe, based on my forecast, could grow to about $2,770. Adobe would have similar growth to the S&P after 57% growth, hence the 57% upside. This was with very conservative numbers though. Adobe's price to earnings ratio is closer to 29 on average. If we plug 25 in here, we see a 264% return over 5 years and 107% upside from today's price. And if we return to 29, we have a 323% return over 5 years and a 140% upside potential. So while Wall Street worries about AI or Figma, this is why I say Adobe will create millionaires. Adobe looks undervalued and has solid growth ahead. So what's the bottom line? Wall Street is scared of AI and Figma, but the truth is Adobe isn't just surviving, it's dominating. Its AI is baked into the tools pros already rely on, making the platform stickier than ever. Figma may look flashy, but it's only one piece of a massive ecosystem that Adobe has built over decades. Photoshop, Illustrator, After Effects, Lightroom, and the Creative Cloud libraries all work together in a way no competitor can match. Adobe will integrate Figma's collaborative features, making it redundant. Financially, Adobe's track record is rock solid. Revenues are climbing, profits are healthy, cash flow is strong, and margins are nearly 90%. Even with short-term blips, Adobe's growth engine is firing on all cylinders. Combine that with capital to reinvest in cutting-edge AI that no competitor can touch, it's clear. Adobe isn't just adapting to the future, it's defining it. When you combine its financial strength with my 5-year forecast, the upside is massive. I believe Adobe has millionaire maker potential for investors who can see past the noise. Most people are chasing the hype, but the wealth is built by holding on to great companies while they're cheap. And right now, Adobe might just be one of the best overlooked opportunities in the market. If you've been waiting for a moment to reconsider Adobe, this is it. So, what do you guys think? Let me know in the comments. Bye.